Interest rates are still high, prices really haven't come down yet, and yet I am still buying. In this video, I'm going to be talking to you guys about how I am financing a lot of my deals and what to do moving forward based on the economy and the scenario that we are in today. Hey guys, I'm Hoan. Welcome to the Hoan Zone, where we help you multiply the assets that you own. Today, I'm going to be doing a long form video where I am just going to be riffing from my head, from my gut, and telling you guys what I have going on so that you guys can learn about how I am doing real estate deals now in January of 2023. Let me know in the comments if you guys enjoyed this kind of video format where I am just talking without a script and telling you guys about real estate investing. The deals that I'm doing are primarily in Philadelphia, so everything that I'm going to be talking about today is going to be pertaining to the Philadelphia market and buying in Philadelphia for rentals. Now, when I am talking with a seller, typically, and it has been so far, typically my seller is older. They're looking to move. They're looking to downsize. They are looking to move into either an older folks home or just downsize into an apartment and not have to worry about their house anymore, which is a great thing for me because it allows me to figure out a win-win scenario for me and them. One of the things that people don't realize is that when you're trying to buy a house from somebody, it is a very emotional thing for them. And when it comes to emotions, you have to consider things that may be illogical, but it is very real for them. One of the things that I found was that when I'm dealing with the sellers, that me buying the house as is without putting it up on the market, or without them having to put it up on the market, without other people walking through their house, without other people seeing their business and seeing how they lived, is a big deal. Even though they won't own the house anymore, right? Even though they won't own the house anymore, even though somebody else might handle it like a real estate agent, they don't want strangers or even people, or worse, people that they know walking through their house. So when I say, hey, I'm just going to buy your house as is, they feel really good about that, which is really key to point out to sellers. Let them know that, hey, one of the benefits of working with me, and this is, I literally say this with sellers, one of the benefits of working with me is that I'm going to be buying your property as is, just like this. You don't have to put any work into it. You don't have to put any money into it. And best of all, nobody else is going to know your business. And I say that, and it's very comforting to people. So make sure you use that when you're pitching sellers on them selling the house to you. You're trying to make it as easy as possible. And now, I said it a couple of times already, which is I'm buying it as is. So in order to be able to do that, you need to be really good at looking at the house and figuring out what the rehab cost might be. And every time you look at a house to try to figure out the rehab cost, just know that it's going to be a guess. You're not going to be perfect, because how are you going to guess that a house costs $65,437.15, right? That would be perfect, but you're never going to guess that. You're going to be in a range. You're going to be like, okay, the rehab cost might be anywhere from, say, $60,000 to $70,000. So you got a $10,000 range. And if you can get it tighter, right? But you're going to be in a range. And as long as you're okay with the range, then you're fine. So here's an example. Let's say I was buying a house for $200,000 and I knew that the ARV, the after repair value, was going to be, say, something like $350,000, right? I would be okay with buying the house for the $200,000, even though the rehab might be, say, $80,000, right? Because I have that $70,000 equity position that I'm going to go after. Now, I think the rehab is going to be $80,000, but it might be $90,000, right? There's a range. It might even be $100,000, so a $20,000 range, right? So I got this fluctuation, but it also might be 70. So really 70 to 100, right? $30,000 range. That's a big range. But I know the ARV is 350. So even with this like worst case scenario of 100 grand, I'm still in a good position. So when you're guessing your rehab, you're going to be in a range. So get really good at making that range smaller so that you can offer a price to buy it right there and then. The other thing that I do is I have my iPad with me and I have agreement of sales right there, ready to sign and send off to the title company as soon as we can come up with a number. So I will walk through a property. I'll take a look at everything, and in my head, I'm calculating how much things cost. So I might say like, okay, this living room, it's pretty good. I might spend $2,000. And then I look at the kitchen and like, oh, okay, the kitchen needs to be blown out, completely done, whatever. I might say something like 15,000 or 20,000, depending on the size, depending on what's needed, depending on how much needs to get demoed, right? So I'm doing this calculation in my head, or even with the iPad, you just write it down and then you add it up. This is the room by room method that I do. And again, you're never going to be perfect, but at least it gets you close. So you walk through each room and you put, it's going to cost 1,000 or 10,000 or 15,000 or 20,000, right? So you got like a 1, 5, 10, 15, $20,000 kind of thing. And you just write that down for each room and you add it up. And then you say, okay, this is my offer. So you're going to go backwards. You're going to start with the ARV. Before going to the property, you should already know the ARV. Before ever stepping foot in the house, I already know the comps. I know the 5 houses that sold around the neighborhood, and I know they're all selling for $350. So before I ever even walk into the house, I know this info. Now I look at all of the rehab numbers that I just wrote down, and I subtract the ARV. I subtract the rehab from that ARV, and then I factor in a couple of different things like finance costs and holding costs and things like that. And before you know it, I have a potential purchase price. And that's how I do my math, right? That's how I do my math. That's how I end up with what I want. So then I can offer them, hey, I'm willing to pay this. So when I offer them the price, they can either say yes or no, but I make it really difficult for them to say no. And not like, I'm going to make an offer you can't refuse kind of thing, not like Godfather style. I mean, like, it's just so like easy to work with me. It's so pleasant to work with me. People really want to work with me. So I make it, when I say difficult to say no, I just remind them of how not great it is to work with other people. Other people are going to nickel and dime you when they walk through their house. They're going to want everything fixed. You're going to have to handle contractors. You're going to have to take money out of your pocket. You're going to have your business out there. You're going to have an agent asking for their commission once you sell the house, right? You got to remind them, like, all of that is a hassle. So working with me, even if you're not getting the number that you want, at least you are getting some value back for it. You're going to have your illogical demands met, whether you knew that they existed or not. When I tell a seller that, hey, I'm going to buy your house and it's going to be hassle-free, that's really good. It's kind of like, if you think about it, when somebody goes to trade in a car, we all know that the dealership is not going to give you what you want when you trade in that car. But why do we do it? Because we don't want to deal with selling it ourselves. We don't want to put it on Facebook Marketplace or Craigslist or Cars.com or whatever. We want to know that when we go into the dealership to go buy a new car, that dealership will take our car, no questions asked. Oh, trade-in? No problem. So it's kind of like, when working with me, it's kind of like a trade-in. I'll take it with all of the scuffs and dings and everything else. I may not give you the highest price, but the process is going to be the smoothest. And for a lot of people, that's what they want. Buying and selling a house is a really emotional thing, and usually people only do it once or twice in their life, their whole entire life. So this process could be really daunting, but then if I can get in front of them and explain the whole process of what it's like to work with me, and I make it really easy and simple, it's like, Hoan, of course we're going to work with you. So this is how I buy a lot of my property. So I offer them this kind of hassle-free process so that they really want to work with me. Okay, so now that's the easy part. I came up with a number, I gave them the offer, and then they're like, yay or nay. Now, how do I come up with all of the money to continue to buy these properties? Well, sometimes when I'm making my offer, it's a multi-offer kind of approach. So I may offer a cash purchase, or I might offer a creative strategy. So the creative strategy is going to be seller financing or subject to. Seller financing is where the seller is going to be the bank. Maybe this is an older person and they're looking to sell the property and they don't have a mortgage. And I say to them, like, hey, how about I give you monthly payments and you become the bank? And what's going to happen is you're going to make even more money than if you just sold it to me outright, because what's going to happen is, instead of you getting, let's say the purchase price was $200,000, I would say something like, instead of you getting $200,000, by the end of it, you might end up with $250,000, $300,000 with enough time. And they go, oh, that's interesting. And I'll even ask them, what do you need the money for? Where is the money going to go? Is it just going to sit into a bank account? And if it is just going to sit in a bank account, then how about you let me help you make money on your money. Sorry, the video is going to seem a little disjointed because I actually had to pause the video to go open the door, and now I'm back at it. So I was explaining to you guys seller financing. I'm going to tell them that they're going to be the bank and they're going to make a little bit more money on the sale of the property because they're going to get interest, and over time they're going to make that much more money. But I also want to relate it back to something that they understand, and that's going to be Social Security payments. They're already getting monthly payments from Social Security, and they like that. That's what they're using to pay their bills. And I say, hey, it's going to be just like that. You're going to have these extra monthly payments, just like your Social Security, but now you're going to be able to do so much more and not have this big lump sum of money in their bank. Here's something else that's really cool, and I make sure to bring this up to them. If you're getting monthly payments, it's very different than having a lump sum of money, because if your family and friends find out that you have a lump sum of money, all of a sudden you're going to feel more generous. And when they find out that you have that money, they're also going to be a little bolder, a little bit more courageous to ask you for some money. And I say this is a way to prevent your friends and family from hitting you up with all this money and you wasting all the money and outliving your money. I want your money to outlive you. I want you to have long game money. So by giving you monthly payments, you're going to have money for longer, way longer. So that's why this is a benefit to you. You don't have these friends and family hitting you up for money and putting you in the awkward scenario of having to say no. So now you don't have to be the bad guy. Yet, you are better in life because you're able to more easily pay your bills. And if you want to buy a gift here or there, again, you have these extra monthly payments on top of your Social Security that allows you to do that without sweating it. Seller financing also allows me to reposition it in their head, because sometimes the offer that I make is a little lower than what they wanted. They might want $250,000 and then I offer $200,000. Well, by offering the $200,000, it's kind of like, ooh, Hoan, I like you and all, but I don't know if I like you that much, right? Well, how about I go like this? Oh, $250,000, I got you, no problem. I can get you your $250,000. You just have to work with me. I can get your $250,000 as long as you allow me to give you that $250,000 over a little bit of time. I'm going to pay you monthly payments for the next 5 years or 10 years or something like that. And then you're going to hit your $250,000. And they may agree to that. So these are the kind of things that you want to do when pitching a seller finance deal, because when somebody's trying to sell their house, even though you and we know about seller financing and subject to and all of these creative things, these sellers have never heard of this. And so they're going to be really leery, and they're going to be like, I don't know, is this legal? Is this safe? Is this right? And they won't know. So you have to put it in such a way that makes them feel relaxed and feel safe and feel like, hey, this is actually good for me. So you put it in ways that they can understand so that they actually say yes versus saying no simply because they're confused. And that happens a lot. A lot of newer students, when they go out there and they shoot their creative strategy offers, they say it with such complexity that the seller says no simply because they can't understand it. Their brains can't wrap themselves around this concept of getting monthly payments and it adding up to this bigger amount. If you say it the wrong way, you're going to get a seller to say no. And that's the thing. That's why training is so important. With my students, I constantly train them, and we do mock trials of like, hey, you're the seller, I'm the buyer. Let's see how this conversation goes. Okay, now I'm the seller and you're the buyer, and let's see how this conversation goes. And we keep working it, and I go, you see what you said right there? That's going to scare somebody. And I'll stop them and I'll work with them. And then eventually they become really great at it. And that's what's going to allow you to buy more deals even now. Because when you get a seller finance deal, does it matter what the interest rates are in the world when the seller financing is only at, say, 4%, right? All of a sudden, you have a 4% loan, and that's why you're able to buy your deal versus everybody else who is now dealing with a 7 or 8% loan, right? It's a big difference. So you have a competitive edge because you can get better financing, because the financing you're getting is directly with the seller. So you're not having to compete with everybody else with the same kind of money. Same thing with subject to. Subject to is similar to seller financing, except for the fact that the seller has a mortgage, and what you're going to be doing is you're going to leave the mortgage in place and you're going to be making the monthly payments towards that mortgage. So let's use some numbers. Let's say they're trying to sell the house for $200,000 and they have a mortgage for $160,000. So that means you have to come to the table with $40,000. That's the difference. And that $160,000 mortgage, that stays in place, and what you do is you just make the monthly payments towards the mortgage. So the monthly that mortgage might have a 4% interest rate, right? And it might have 22 years left on it, or 15 years, or something like that, right? And you just have to make the monthly payments of, let's say, $1,000. Well, that $1,000 is going to be cheaper than anybody else because they're going to be having to pay more because their interest rates are higher. And here's what's really cool. The longer they've had that mortgage, the more money goes to principal with every single monthly payment you make. And that helps you get wealthier because you're paying down that loan faster. So every month you make that $1,000 payment, let's say 400 or 500 goes to principal and the rest is interest, versus having like $100 going to principal and 900 going to interest, right? So you're getting richer or wealthier faster because their principal pay down is greater. So with subject to, you say, hey, I'll buy it subject to the existing mortgage of 160, and then the 40,000 I will give you in cash upfront. So there's no difference in regards to what they leave the table with. They're going to get the same amount of money that they were always going to get, versus you just buy it traditionally, they'll still get 40,000. So it's no different. The only difference is their mortgage is still in place. But then you ask them, hey, are you moving somewhere? Are you buying another house? What are you doing? Like, how's your life going to be like after you sell this property? They might say something like, oh, I'm moving into an apartment building. Okay, great. So your DTI doesn't matter, really, right? Having your mortgage still in place, they're not going to count that against you at the apartment building. And if they try to, you can say like, oh, that's being paid by somebody else. So when you do it that way, they're fine. Their situation, again, is no different than any other situation. And that's the part that you really got to harp on, because they're like, oh, wait, so there's still a mortgage in my name and all that kind of stuff. And you just got to keep reminding them, your situation does not change. It's exactly the same situation. All that's happening is you're helping me. And now, how do you get them to agree to that? One way is back to what we were talking about before. Hey, I would love to buy your house. $200,000 sounds like a fair number. I'll buy your house for $200,000. And I'll even do this. I'll buy your house as is. So I won't ask you to fix anything. But in return, I ask if you would allow me to take over your payments for a few months. So what that means is we're just going to leave your loan in place, and I'm going to make the payments every single month for a few months. And then when I'm done with your house, fixing it all up, I'm going to refinance and pay it off, right? So I just need you to do me that favor. I'm going to do you the favor of buying the house as is. I just need you to do me the favor to leave your loan in place, and I'll make the payments every single month. And so that's a cool way to get them to agree to it, because it's a little give and take. I give, you take, you give, I take, right? It's a little back and forth. So it seems fair. And it is fair. I think it is fair because we, real estate investors, you guys watching this video and me, we are offering a service to them. We are helping these people who are trying to look to sell their house and make it as easy as possible, right? Streamline, hassle-free. Remember, trading in your car, that's what's happening here. So people are trading in their houses and able to move on with their life without the hassle of everything else that comes with selling a house. The easier you can make it for them, then the more likely they want to work with you. And then here's what's really cool, and this is what's been happening for me. Somebody would want to sell the house. I make it hassle-free. They have such a good experience that when they talk to their friends tell them, oh, I'm trying to sell a house. They say, oh, well, sell it to Hoan, right? And so the houses that I'm under contract with now came from a referral from somebody else who sold a house. And that person came from somebody else who sold a house to me. So it's just stacking, boom, 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 boom. You just do a really good job with people. You treat them right. You make it so that everybody likes working with you, and then they're going to tell their friends to work with you. And this is how I'm able to get a bunch of lead flow without doing any marketing. I don't do text message blasting. I don't do cold calling. I don't have bandit signs up. I don't do any of the things that people do. I simply talk or communicate on social media. And then when I buy properties, I make the process so good that sellers just refer me. So those two things, social media allows people to know what I'm doing so that they want to refer business to me. And then my sellers, the people I work with, they want to refer business to me. And then it just keeps on going like that. So do well by people, do good for people, and it will come back, right? Do well by doing good, I think is the saying. Now, when it comes to the $40,000 in that last example that you had to bring to the table, where I would get that $40,000 from is from a line of credit or a credit card or something like that. When I use the line of credit or credit card, that just means that nothing is coming out of my pocket, right? I'm using lender A over here, this line of credit, to fund the deal, and I'm also leveraging the existing mortgage over here. So the two things together means 100% OPM, other people's money. So 100% OPM, and that allows me to buy deal after deal after deal, because once I'm done that project, I refinance, I pay it off, and then voila, I'm good. Or I just let it ride for a long time. Now, the $40,000, maybe I don't let that ride for a really long time. So in order to make this deal work, I'm going to have to get the price a little better. Maybe when I negotiate the thing, I let the seller or the subject to part ride out a little longer, save a little bit more on financing there, and I really ride out the line of credit promotional period, or credit card promotional period. Sometimes when you borrow money from a credit card, they offer you 18 months of interest-free financing. So allow that to ride all the way through and save a whole bunch of interest that way, and so that when it comes time to refinance, I'm still in a good position because I've saved so much money in the first 18 months. So there's a bunch of ways to chop it up, right? Know your numbers though. Know your numbers. Make sure that the rent that you're going to be collecting is enough to cover all of your debts and everything else. That's the most important part, positive cash flow. Even if it's a little bit positive, as long as it's positive, that means no money has to come out of your pocket to pay for your deals. I talk to so many people, and I tell them that there's so many creative ways to buy real estate, and that it doesn't require any money from your pocket. It requires money, but it doesn't require your money. And I tell them that, like, you're going to be taking on debt from other people, yes, but you have tenants that are paying those debts. And if done right, and all goes well, and let's say the tenant is paying, then you're good. You're positive. You just bought yourself an asset that has equity, where you're paying down debt, and so you're getting richer that way. The property is potentially appreciating, going up in value, and you're getting the tax benefits. All fantastic things, and you're getting the cash flow because the tenants are paying you more than what you're paying out. And if you do this for the next 10 years, guys, you're going to have this huge portfolio of properties where your debt has been paid down for the last 10 years and the property appreciated and all that kind of stuff. You're going to be pretty rich. So this is why you want to try to figure this out and buy as many properties as you can, so that down the line you're going to have this huge retirement, like nest egg essentially, that's continuing to pay you cash flow but also making you really wealthy because it keeps on going up in value, as well as the debt being paid down. So this is why you guys want to do this. It's not because you're going to get rich today and drive Lamborghinis and all that, even though you can, right? Even though, let's say you do 3 projects, right? Let's say you do 3 projects and each project makes $100,000, right? You have a $100,000 equity position or something like that, right? That's $300,000. You want to buy your Lamborghini? Go buy your Lamborghini. You made the money. Fantastic. Go buy it. Get it out of your system. Then after you buy it, you're going to realize that that's not what life is all about. But at least you got it out of your system, right? So you get the Lamborghini, you drive it around for a while, and you're like, wow, this is really cool. Before you know it, you're like, okay, this is just a car. I'm going from A to B. I actually don't like driving it to Whole Foods. I can't get over speed bumps. I don't like all these people looking at me. I don't like this. I don't like that. And before you know it, you're going back to driving a Toyota Camry. It's like, yeah, I had a Lamborghini one time, but I don't like it. So that might be you. So get it out of your system. Get it. I want you to get it. It's like what Jim Carrey said. I want everybody to become rich and famous so that you realize that that's not it. So buy your Lamborghini. Fine. Whatever, right? I invest in real estate because it affords the life that I like. And the life that I like doesn't require a bunch of flash and bang, right? It requires me being free to be able to do what it is that I want whenever I want. And that to me is really cool. That's the crux of the whole thing, just being able to enjoy life the way I want. So real estate allows for that, and it allows me to know that my future is pretty much secured because I have these properties that, like we've been talking about, are going up in value and being paid down and producing cash flow and all that kind of stuff. So it's kind of like a 401k that is constantly building on its own without me contributing to it. And that's what's really cool. So I have all these properties, and I do that because, again, it affords the life that I want. And it's a very simple life. If you want more, go do more deals. If you want the Lamborghini, if you want the purses, if you want the watches, if you want all that kind of stuff, great. Do more deals. Do more. Go knock yourself out. And then get all those things. And then if you realize, like, okay, life's not all about that, then fine. And if you think, like, wow, life is better with the Rolexes and everything else, great. Go do more deals and buy more of those things. The life's abundant. You get to do as much as you want. But at the very minimum, do enough real estate to cover yourself, to cover you and your family from all of the things that go bump in the night financially. And from there, build as high as you want. You can become a billionaire from this if you want. if you want. And don't go chasing that just because you think that's what it's supposed to be, because again, like Jim Carrey said, I want everybody to become rich and famous, so you guys realize that that's not it. Now, if you guys want a couple of takeaways from this video, I would say get really good at seller financing and subject to, understand the ins and outs of it, and when a deal comes up, you'll know how to slice it up 15 different ways. So get really good at seller financing, subject to. Also, build up your lines of credit and credit cards. And that's it. If you have those 4 things, seller finance, subject to, lines of credit and credit cards, put that together, you can do a trillion deals. I'm telling you, it's like deal after deal after deal after deal, because what happens is you refinance, you pay off everything, and you go do it again. And that's the beauty of it. Rinse and repeat over and over and over. That's what, once you learn these things, once you learn those basics right there, you can buy a whole bunch of properties. That's why when people, like, they don't understand why I'm able to buy so many properties, it's because they just don't understand those fundamental things right there. Those 4 things. That's all I do. And 5 if you include the refi, right? So seller finance, subject to, lines of credit, credit cards, refinance. Over and over and over. Rinse and repeat. Now, one more thing you can add on to there, just to make it even more fun, private money. So instead of a line of credit or credit card, private money, right? So the private money can hop in there too, to act like the line of credit or credit cards, to give you the money for the equity, or to provide you all of the money you need. If the seller's like, no, I don't want to do seller financing, I don't want to do subject to, fine. Negotiate a really good cash price, then get a private money lender to give you all of the money, and now you're paying the private money lender a monthly payment like you were going to do for the seller, but instead of the seller being the bank, now your friend, family, whoever is giving you the money, they're the private bank. They're getting the Social Security check, and they're going to create more money for their money without having to do any work. So those are the kind of things that you want to think about. But if you figure that out, the world is your oyster. There's a lot you can do, a lot of things you can buy. All right, guys, if you liked that video and you guys want to work with me a little bit closer, feel free to email me, hoan@hoanzone.com, or you can also go to hoanzone.com. There might be some kind of free gift. I think right now I have a 5-part training, so if you guys want to check that out, go to hoanzone.com, or again, if you want to email me directly, go to hoan@hoanzone.com, and feel free to ask me questions with whatever you're working on, with whatever you're struggling with, and let's see if we can help you find a solution. Also, don't forget to share this video with a friend. Let them know what you're doing. Show them this video. Say, hey, I'm really excited to do these kind of strategies for my real estate investing portfolio. Are you interested in raising, or are you interested in lending money? Do you know anybody trying to sell a house? Or you this, that, the other, right? Send them this video. It shows them what you're up to. And then this way, they can be a part of your journey and help you build your real estate portfolio easier. All right, guys. Well, that is it. Thank you guys for watching this. I'm Hoan Tai. Let's multiply.